Richard Bernstein, él es el CEO y el CIO de Richard Bernstein Advisors. Richard, thank you so much for having us a few minutes.
Yeah, great. Thanks for the invitation.
Richard, the US jobs report for March is coming up on Friday, and of course it will be closely watched. What can we expect?
So, Marta, I think the U.S. jobs market is going to remain incredibly tight, if not historically tight. The leading indicators of employment here in the States are still very, very healthy. And I think we'll see that in some of the leading indicators in the report that comes out on Friday. So I would continue to take the over, if you will, on the employment report.
Mm-hmm. And Richard, ahead of that, there will be an update on inflation in what is said to be a busy week on the economic calendar. We will know the PCE evolution this Thursday. The PCE price index is the Fed's preferred measure of inflation. Could these data surprise us?
So I think, Marta, two things. One is in the near term, inflation is still going to be very strong. There was even data that came out this morning from the Dallas Federal Reserve that talked about companies' pricing power, anticipated pricing power. I think we should expect in the near term that inflation is going to remain very strong. I think for investors, the other thing that they have to consider is secular inflation. What's inflation going to look like over the next 1, 3, 5, 7, 10 years? And I think for that, we're entering sort of a new paradigm where people should expect higher rather than lower inflation as globalization continues to contract now.
Mm-hmm. Developments in Ukraine and oil prices will also continue to shape market sentiment. We've been watching carefully to this measure. How do you see the mood of individual investors?
Yeah, so Marta, I think gasoline prices, oil prices, energy prices are clearly skyrocketing, but they're not at a level yet that would suggest that we're starting to stymie demand, that we're going to start curtailing demand. That's not happening yet. So I think we should expect this to continue to go up. Now, that's going to be a big issue for consumers in the United States. It's going to be a big political issue, to be frank. But there's really not much right now in the near term that suggests that we're going to start curtailing demand. So we should expect higher gasoline prices, higher energy prices going forward.
With the current market scenario, which investment opportunities do you see right now?
So we think that there are unusual opportunities in what we like to call pro-inflation assets. So that would be energy, that would be industrials, that would be materials, it would be financials to some extent, commodities, of course, commodity-related emerging markets, gold, things like that. If you take that group that I just mentioned, those 6 or 7 or 8 different asset classes that I just mentioned, in total, investors are underweight that group, regardless whether institutional investors, pensions, endowments, foundations, individuals, everybody is underweight pro-inflation assets. It's almost as though, Marta, everybody's still investing for the last economic scenario and not the next economic scenario.
Richard, thank you so much. It's been a pleasure.
Thank you.